Hello, Ram. I think only you have joined so far. Class is at 6, right? Yeah. All right. So today we are starting, I think, off with variances. Basic variances, just let's go through. There are 4 types of standards. Standards are what we set at the beginning of a period. You have a basic standard, current standard based on current performance. You can have ideal standards, like if you ideal standards, meaning if you take no rest and if you work like perfectly at the proper levels of efficiency, what is expected of you. Then you have attainable standards. That's a little more than the basic, but something that is a little tougher to achieve but possible to achieve. So it's attainable standard. It may be motivating because staff know that they can achieve it if they work a bit harder. Then you have something called flex budgets. That is when okay. So you have a flex budget. It's when like a fixed budget is flexed for a particular level of activity, right? So these are the basic variances you all need to know about. You have the sales price volume variance. It basically checks like if the standard and sales price variance. First, let's look at the total sales variance. This looks at, okay, the actual revenue, and the difference between the actual revenue and your budgeted revenue. So if your actual revenue was greater, your sales variance is favorable because actually you have achieved more sales. If your actual revenue was lesser, then it's unfavorable because in reality you have achieved less sales. Sales price variance looks at the actual price and the standard price. So if actual price was greater, you will have favorable variance. Volume variance looks at the quantities. If actual quantity sold is greater, it will be favorable. If you are using absorption costing, you multiply by the standard profit margin. If you are using marginal costing, you multiply by the standard contribution. Then you have material price variance that looks at the difference between the standard price of material and actual price of material. Now here it's a cost variance. So if the actual price is greater, it is unfavorable. Usage, you're looking at, okay, how many kilos did you expect to use and the difference of that and how many kilos did you actually use. So if you actually use more kilos, that means it's unfavorable. Then you have labor rate variance that looks at the differences between the labor rate paid per hour, the standard and the actual. So if actual was greater, it becomes adverse. Labor efficiency is about the hours the laborers took. Did they take more hours than required or did they take lesser hours than required? Idle time is like if you have worked and have been paid, if you have been paid but you have not worked during those hours. So actual hours worked minus actual hours paid, because sometimes you might have worked like for 4,000 hours, but you're paid for 4,500 hours. So 500 hours you're paid in vain, like for idle time. You did nothing during that 500 hours, but the company paid you. So it becomes idle time, right? So how much did you incur for that? It's always an adverse variance. Variable overhead expenditure variance again looks at the differences between the standard rate and the actual rate. Variable overhead efficiency variance looks at the labor time again, but the only thing is they take the variable rate here. Fixed overhead variances, you have capacity, the actual hours minus the budgeted hours into the standard rate. Efficiency, you take the standard hours minus the actual hours into the standard rate. Total fixed overhead volume variance is the standard hours minus the budgeted hours into the standard rate. So those are the basic variances, but then we learned more. We learned advanced variances of PM. We learned the material mix variance. That is basically when you change the mix of ingredients, how does your cost change? If you use in actual more of the expensive ingredients, your mix variance will become adverse. If you use in actual more of the cheaper ingredients, your mix variance will become favorable. So mix variance is when you change the mix of ingredients, how will your total cost change? So there's a set format that you follow for it. Actual quantity in standard mix. Compare it with actual quantity in actual mix. Take your difference, multiply by standard cost, and then calculate your variance. Material yield variance is basically for the given output. Did you take more input or did you take lesser input than planned? So if with limited input you made a maximum output, your yield variance will be positive. Yield is about the input to output ratio. With the given input, did you get maximum output is what it checks. Sales mix and yield, like if you sell your output in a different quantity than you planned, how is your profit going to change? Sales quantity variance. If again the same thing here, the basically mix is like if you change the mix of items sold, how would your profit change? Here, if the volumes changed, how would your profit change? Then variances can further be divided into planning and operational variances. Planning variances are due to differences between actual and budget or actual and standard because of external events. So that the manager has no responsibility over and he couldn't control. Operational variances are arising due to stuff that the managers could control. It was within their control. So generally planning variance, you take the difference between standard and revised standard. When the standard changed, so standard and revised standard, the difference between that. For operational, it's the difference between revised standard, that means the new thing that is expected because of the new condition, and the actual performance. So planning is the first standard you set and the revised standard, the difference between that. Operational is the difference between the revised standard, the what you can achieve in the current situation, and the difference of between that and the actual performance. So that is something the manager could have controlled. So all the variances we did so far have been divided into planning and operational variances. You can say I've given you formulas for each. You can go through that and study it out of that. When you learn these formulas, you can apply them for your questions. So when there is planning and operational variance, the advantage is that you can see like why the differences occurred. Was it due to something managers could control, or was it due to something the managers couldn't control at all, right? You can find that out. Just give me. Mute others. Who is? I'm the only one is speaking, right? Line is still not clear. Ram, is it okay now? Okay. I'm sorry, I did not hear anybody who was muted. Okay. So why do you have to do this planning and operational variance? Mainly because you will know which variances could have been controlled and which could have not been controlled, so you can take the corrective actions. The limitations are that, okay, what is the correct standard? That is also very difficult to calculate, and even when you're revising the standard, it might not be a very easy thing to do. It's a little tough to do, right? And sometimes what happens is now, because you're dividing into planning and operational, the management might try to, pass all the adverse variances and try to show that it was due to planning reasons. So they might try to push it there. So you should try to avoid that and make sure if management has not done something right, they should be penalized based on the operational performance, right? So, and also revising the standards are very costly. That's also there. And also not just calculating the variances, you have to give meaning to the variance. That is the more important thing. So more than just calculating your variances, the meaning you give to the variance is more important. Revise an original budget. Original budgets, that's what I said, due to planning factors, when outside conditions change, your original budget can be revised. But what do you mean by revising? You're basically changing your budget according to the new situation that is arising. That is revising a budget. That is because of outside conditions that have changed. Right? So when you're setting budgets, you have to make sure your staff are motivated to achieve the budget, right? So it should not be too difficult. It should not be too easy. It should be something achievable, right? And you should try to get them involved and participating budget setting, especially if the guys are skilled. If your employees are skilled, it's best to get them to participate in the budget setting process. If they're unskilled, then okay, don't waste your time. You don't have to get them involved. Just-in-time total quality management, all new techniques that have been used by business to save on time and to reduce idle time and adverse variances, right? So just-in-time is when you get your material delivered just-in-time from your supplier and you produce just-in-time and you deliver it to your customer also just-in-time. So you don't have any stock in your premises. You don't hold stock at all because you want to reduce that cost to a zero. Just like that, total quality management keeps quality at its topmost priority, and all staff, you try to involve all staff and you try to make sure that they all focus only on quality, and at all times they try to make sure whatever they do it right. So it's a process of continuously improving business and performance. Generally, these are all Japanese techniques. Japanese are normally like this. They do not have to be trained. They try to do everything perfectly, properly, and try to avoid wastage, waiting time, all of that. They're always on time. But people in the other parts of the world have to be trained to be like that. When you adopt systems like TQM, just in time, you automatically reduce wastage. So these systems can be introduced to reduce your adverse variances. So these are about variances, and now let's get to some questions on variances. So just roughly went through that. I think, okay, students are now watching it on live stream, no? So they're not joining here. Guys, the last class till where did I do? Around. These are basic variance. I'm trying to avoid the question because it's pretty simple. I think I'll go to advanced variance analysis. Ram, last class till what area did I do? I remember like I had to start with variances today. Am I right? I don't know. I'm not very sure. Can someone just remind me where we stopped last class? Like which area of study? Okay, Pan Ocean Chemicals. Pan Ocean Chemical has one product that requires inputs from 3 types of material to produce batches of product Synthon. Standard cost details for single batch are shown below. Materials, labor, whatever is needed according to standard material, you need 3 types. S1, S2, S3. The kilos are given per unit and the price per kilo is also given. Labor, just they need 1 hour and at $5 per hour. A standard loss of 10% of input is expected. Actual production was 15,408 kg for the previous week. So the actual production would have been after allowing for 10% loss. So we have to see the actual input. This was the actual output. Details of the material used were actual material used. Just add this up and see how much it adds up to the actual material used. 19,153 actual use. I think they allow for the 10% loss. Next, introduce. Actual production was 15,480. Standard loss of 10% of input is expected. Actual production was 15,408 for the previous week. Okay, but anyways, this is what was according to standard. That is how much they should have used. But maybe there was a abnormal gain, right? Actual material use. Total labor cost for the week was 6,916 for 1,235 hours worked. Calculate the total material mix, yield, and usage variances. So let's calculate the material mix. Material mix variance. So let's take the format for it. Material mix variance equals actual quantity into standard mix minus actual quantity. We can take it like this, right? AQ into SM minus AQ into AM into standard cost. So we take AQ into AM, AQ into SM, AQ. What are the three types of material? S1, S2, S3. So these are the actual material used, right? So that's the actual quantity in the actual mix. So that is how much. Now we have to put the actual quantity in the standard mix. So I told actual quantity in the standard mix. Actual quantity is this. Now divide that in the standard mix. See, standard is 8 of this, 5 of this, 3 of this. So altogether 13, 14, 15, 16, right? 8 plus 5 plus 3 is 16, yeah. So how do you put this in the standard mix? Actual quantity into 8 divided by 16. This into 5 divided by 16. This into 3 divided by 16. Now take the difference. Multiply by the standard cost, price per kg. And then you take your variance. Okay, so what is your variance here? That's your variance, it's adverse. It's adverse. So that is your material mix variance. Then they also asked you the material yield variance. So when you know the format, it's pretty simple, especially if you have practiced this, you can very easily do it. Quickly take note of that. Just take a few minutes to think of it. Right. Then next they're asking you the material yield variance. So let's write the format down. It's very easy when you write the format down. So material yield variance is standard mix. It's pretty simple, right? You just have to see here. Now this is the standard mix. 8, 5, 3. So it's 8 is to 5 is to 3. So altogether 16. So that means 8 over 16 is for S1, 5 over 16 for S2, 3 over 16 for S3. So you take here the actual, this amount. For S1, 8 over total of 16. It's like a ratio. You divide it according to this ratio. 8 is to 5 is to 3. Did you get it? Metara, did you get it? You divide it in this ratio. They would have given here, right? According to standard, this is how they put it in that ratio. Okay. Then the next one, material yield variance. SQ into SM, AQ into SM, difference, multiplied by standard cost variance. Now the good thing here is we already have the AQ into SM, we already have, right? We've already done that calculation. In this case, we've already done it. So we can just use those figures. SQ into SM is standard quantity in standard mix. We have to take like this. Actual production was this, no? Output actually, guys. The output was 15,408. So according to standard, three types of standard cost details for a single batch are shown below. For one batch only they have given here. Here they have given you for a batch. For one batch, according to standard, 8 kilos of S1 is needed. So how many batches were actually made? Actually, how many batches were made? How do we see that? Oh, for one batch, you needed 1 hour, right? So actually, they have used 1,235 hours. So can we assume that they made 1,235 batches? Labor cost is given. How many batches have they made? They have made we have to see how many batches they have made. What we can do is this. So actually they have used 19,153 kilos. Out of that 10% loss is expected. So 19,153 into 10% loss, meaning there is a loss of, wait. Input 19,131. Then the loss expected is so the output would have been okay, that would have been the output. Now for a batch, they have given this. Now, how many batches would have been made? We need to find. According to this, actual production was 1548. We need to know how many batches were made. How do we find them? Because they have given per batch. Standard kilos, cost details for a single batch. Actual production was previous week. Direct material used were as follows: 1,235 hours were worked. So if we take okay, we can do it like this. To find the batches, we can do like this, right? Input per batch is how much? 853, right? Input per batch. That means all the material input per batch is 8 plus 5 plus 3. So in this input, there will be a 10% loss as well. That means the output per batch would have been. So they have actually how many batches then? So in one batch, 14.4 kilo output is there. And this is the total output. So therefore, how many batches? They have made, we could say roughly, they have made, this is the output. And in one batch, there is 14.4. So 1197.06, right? So now let's find for one batch 8 kilos. That means for 1197 batches, how many kilos? 5 kilo per batch. And actually there was 1197.06 batches. So that is how much they should have used. 3 into that is the number of actual production, right? So standard meaning according to the standard for actual production, how much you should have used. Standard quantity into standard mix meaning according to the standard for the actual number of batches produced, right? How much you should have used. The actual amount of batches produced. No, wait, they have told you here. Actual production was for 15,408. That divided by 14.4 is how much then? In one batch, 14.4, 1,070 batches. 5 into 1,070. 3 into 1,070. Yeah. 7, 7. So what happens here is, right? Let me explain that to you all. Now here the actual quantity in standard mix is all right. Here you have to take the standard quantity in the standard mix. That means for the actual number of batches made, you have to see how much according to standard you should have taken. So we have to first find the actual amount of batches made. Now in one batch, they say you put 16 because you add all together, it's 16. But there's a 10% loss. That means in one batch, the output is 14.4. And here they have told you actual production was 15,408. That means in 15,408, when you divide by 14.4, actually they have made 1,070 batches. When you take the actual production. So maybe because here, this is the expected output. We cannot take this because this is expected output. Right? The actual output only is what we take. So there is actual output of how much? Actual output was even lesser than expected. 15,408. There was an abnormal loss as well in this situation. So we don't account for that. We have to take the actual output. So actual output was this. So in this actual output, one batch would have taken 14.4 kilos. That means actually there was 1,070 batches that were made. So the for 1070 batches according to standard. For 1070 batches according to standard, for one batch 8 of S1. So into 8. So for 1070 batches, you need this much of S1 according to the standard. For 1070 batches, you have to multiply by 5 because for one batch you needed 5. For 1070 batches, you needed this much. Here again, for 1070 batches was the actual number of batches into 3. Sorry, into 3. Then you take the difference and multiply by the standard cost to get your material yield variance. Material usage variance is pretty simple. You don't have to do much working for that. You can simply take material usage variance will be the addition of the mix and the yield. So that will be minus 775.081 plus, or is it minus the other one? Minus 284.21. Both are minus. Minus 284.21. So you minus both together and get your total material usage variance. Okay. Next one, explain why the sum of the mix variance for material measuring kilos would always be 0. For the mix variance, okay, if you just took the differences between the kilos, it will always be 0. Why? Because the same output is put in a different mix. So the output kilos, when you add together, it will always be 0. You can see here. The kilos, when you take the difference, is always 0. So I ask you to explain that. How can we put it? We can say the total mix variance measured in quantity is 0 since the expected mix is based on the total quantity actually used, and hence the difference between total expected and total actual is nil. Always the difference between these two are nil. I think we have missed some other variance. Calculate the labor rate and efficiency variance. We did not do that. Labor rate and efficiency variance. Labor rate variance is a basic variance. You take it from basic variances. Labor rate variance. Take it from here, labor rate variance. Here you are. Let's write the two variances down. Standard rate minus actual rate into actual hours used. Labor efficiency would be, let's write down the variances for both down first. Standard hours for actual output minus the actual hours into the standard rate. So always write down the variance first and then look for the details. So standard, the actual labor, the standard rate was 5 per hour. Actual rate we can find, right? They've given the total cost and the hours worked. So actual rate will be, this was the actual total cost for this many hours. So rate per hour was 5.6. Into actual hours worked was 1,235. So that's adverse. Standard hours for actual output, which is 15,400 and for actual output 15,408, we should have taken 1 hour for one batch, right? 1 hour for one batch. So 1,070 batches, meaning according to for the actual output, 1,070 actual output, that is actual number of batches, we should have taken 1 hour per batch. So we should have taken 1,070 hours for the 1,070 batches. But actually we took 1,235. And we have taken more than we should have. So the total variance. No, this that's also possible. Okay, so that's all for that question, right? That's all for that question. It's just a small question. Oh, there's one question. Okay. Next question. Bledsoe Denzel Co. This reconciliation is a very good question to do, right? It's a very cost of actual output based on original standard with the actual cost. The reconciliation should show the total planning and the total operating variance. It's a very good question to do. I'll explain you how to do that reconciliation statement using this, right? It's a very good question. Denzel Co. Going, by the way, how's everyone studying going? Have you all finished most of the syllabus areas? I think most of you have sent me doubts. I told you that in today's class, I will clear those doubts. So the first part of the class, I'll just go through these questions. Second part of the class, I will clear your doubts because I have got, can you all resend your doubts, please? Has this girl joined who, someone asked me for the link of TRG. Wait a minute. Is that a student volume? Whoever has sent the doubts, please resend them. Nobody resent it. Ram, if you had sent doubts, please resend them. Everyone who has sent your doubts, please resend them. One moment. Okay, Denzel Co. Denzel makes and sells a single product. The company budgeted to make and sell 120,000 units in November. The standard cost of labor for the product was as follows. Labor 1.25 hours at 12 per hour. Actual output for November was 122,000 units. Labor cost for the month was as follows. Labor cost they've used 158,600 hours at a cost of 12.6. That was the actual. And the total cost is also given as 1,998,360. Prior to calculation of variance, it has been decided to revise the standard cost retrospectively to take account of the following, which are considered to be out of the control of the managers, whose performance is evaluated based on variances. A 3% increase in the labor rate to 13 per hour due to negotiations with unions that were concluded after the initial standard had been set. So they have increased the labor rate to 13. That's a revised standard because of certain negotiations with the unions. That was the revised standard. So 12 was the standard. 13 is the revised standard because due to external factors, they had to change that labor rate to 13, but that was not informed. So actually they have paid 12.6. The standard for labor use had anticipated that the company would buy a new machine, which would lead to a 10% decrease in labor hours. So according to standard 1.25 hours, according to standard 1.25 hours, but now that has decreased by 10%. So actual like revised standard will be like 1.1125% or 1.1125 hours. Instead of buying a new machine, existing machine have been improved. So a more appropriate standard is considered to be 1.6. Oh, the revised standard is 1.4. Because they did not buy the new machine, they improved the existing machine, and now it's taking 1.4 hours per unit. That was the revised. The actual we have to find. So let's write this down. Actual, revised, and standard. Let's put standard first. Revised standard. And so rate standard was 12, revised standard was 13, actual was 12.6. Then the hours stand for 1.4. Actual was 158,600 for 112,000 actual units. So 1.3 hours per unit they have taken actually. Prepare a statement reconciling the standard labor cost of actual output. So we have to start with standard labor cost of actual output. Okay, what is the standard? Okay, the reconciliation statement. Standard labor cost of actual output. To what are they asking to reconcile? Based on the original standard with the actual cost. To the actual cost they wanted to reconcile. The reconciliation should show the planning variance and the total operating variance. Okay. Actual cost was this. They've given it here. The standard cost would have been what? Based on the original standard. Standard labor cost of actual output. Standard labor cost for the actual output would have been, according to standard, 1.2 hours per unit. So this many units were actually produced. And you should have paid 12 per hour. So according to standard, purely according to standard, your labor cost should have been this much. But due to planning differences, so due to a planning variance, they ask you to reconcile using the planning and operational variance. Due to the planning variance, how do you calculate the labor rate planning variance? Labor rate is what we are looking at. So let's go to the labor rate planning variance. Labor rate planning variance. Standard rate minus revised standard into the actual hours. Standard rate was 12, revised was 13. Actual hours was how much? So due to planning reasons, there was a difference of this much. So due to planning, the cost has gone up by 158,600, right? It's gone up by that. And due to operational variance, what is your operational variance? Revised standard is greater. So the cost has gone up, meaning you need to add it, right? Cost has gone up, so we need to basically add it. The difference between standard and actual, the cost has gone up here, so we need to add that. Right, so adverse, meaning cost has gone up. So in this case, we're adding it. To get to the actual cost was greater, right? Due to this, so we add it. Then you take the operational variance, revised standard in actual hours. So that was 13 reverse rate minus actual rate 12.6 into the actual hours. So due to that, there was a difference of the actual rate was lesser. So it's a favorable. It's favorable, but we need to act because the cost goes down. I don't know if this amount was right. We're preparing a reconciliation statement. Right here. So now see, it's standard, but the cost went up due to this, and the cost went down due to this. Sorry. Oh, there's something wrong. Standard rate, revised rate. Revised rate is 13. There's something wrong somewhere. I can't. Maybe some addition I do. 118360. This is right. Actual hours is also correct. This is right. This is also right. Our planning and operational variance is wrong. What is that? Sorry. Oh no. Take the total planning variance and the total operational variance. So we not only take the labor rate, we also have to take the labor efficiency. It's a total planning and total operation. Then this is the labor rate of planning variance. We also have to take the labor efficiency. We have to take both, not just one. The total, they very clearly said total. So labor efficiency planning variance is standard hours. So we need a little more space. This is the labor rate. We also have to take the labor efficiency planning variance. So that's standard hours minus the revised standard hours. Let me take both. Because they said total, right? Let's go down a little more. Let's put some space. Taking both the planning variances, not just one, others it will not. Because they have clearly said take the total planning variances for labor. So labor efficiency standard hours was, I think I'll make this for working. Standard hours was, they actually made 1,222 units. According to standard for 1 unit, 1.25 hours. So that many hours. Revised standard was this many units according to revised standard 1.4. So I don't remember the amounts. I take the hours here, right? Hours in total 1.25 into 122,000. 1.4 into 122,000 actual units. I'm basically seeing for the actual units, what are the standard hours, what are the revised standard hours, and what are the actual hours. I think this is already given to us. So standard hours into the standard rate of 12. So here, guys, variance, but the cost will increase, right? So we put it as plus. So 21600 plus the total planning variance would have been this much. In this case, they have just taken the balancing figures, but let's do it accurately. And then let's not look at the answer. We also have to take the operational variance for the efficiency. Revised standard hours. The standard rate. Actual hours was lesser. So that makes it favorable, meaning the cost will go down. Yeah, correct. So these are very accurate figures. The other place, they have just taken the balancing figures. But this is the more accurate thing to do. So this was the total planning variance, right? And this is the total operational variance. Can you all copy this down, guys? Because I don't think you all have done something like this previously. In the marking scheme, they have just taken the balancing figure, but the more accurate way of doing it is this. So now you could see that if you take your standard cost, add your total planning variance and minus your total operational variance, you'll get the same thing. So now you have created a reconciliation statement. So the difference between the standard and the actual are due to two reasons. Due to planning reasons, there has been addition to the cost. And due to operational reasons, there has been a lesser, that means a subtraction, because the actual hours and the actual hours used was lesser, right? Even the actual rate was lower. So there were two reductions in cost. Can you all copy that down, please? Take note of this. This is a reconciliation statement. So they can even give this for other costs, right? Like for material cost. So you have to do something like this. Take the standard, add the two planning variants if they have said total, and subtract the two operational variants. You will see here that they have just taken the balancing figure. But for 10 marks, 4 marks. For 4 marks, you can even do that. But if you're going to do that, what you have to do is, but the answer is not 100% accurate, but you still can, I'll just teach you how to do that. If you're taking the balancing figure, what you will do is, in the middle here, between planning and operation, you will calculate another figure. Is that figure called? You will calculate a figure called the revised standard cost for actual output. That how do you do that? You take the revised stuff, which is 13 per hour into 1.4 hours per unit into 122,000. All the revised stuff. And you'll get that figure in the middle here and take, like, I'll teach you how to do that, right? So then the figures are different for that as well. Then you will compare this with this here. And the difference between these two will be the planning variances. So difference between this and this is the planning variance. That's why the figure is a little different there. And the difference between this and this would have been the operational variance. So you can do this in two methods. Both methods are slightly different amounts, but you still get your marks, whatever method you have used. But definitely the one we did first is more accurate. And then the difference between this and this would have been your planning variance. So this is what they have done in the, you can see this is what they have done in the mark scheme. Right? So I'll just say method 1, method 2, but take down both of it. This is method 1. To do it like properly calculating the variances. And then you have method 2. You all can take note of this because I'm sure you all have not done something like this previously. Marking scheme, they have used method 2. Is that clear, everyone? Guys, is it all clear to you all? Guys, are you all taking note of it? Why no noise? Hello. Can everyone hear me? Okay. Please take note of it, guys. I'm giving you all a few minutes to take note of it because it's something different, right? Not done. For the exams, if it's section C, good to write it. But if it's other sections A and B, you don't need to write formulas. Who is this AI? What's your name? Okay, hello, Amra. Have you taken note of this? Once you have taken note of it, say done, right? But guys, you can even be given like other variances in this format, like even material. So you have to read in a very similar way. For third part, that section C, you will get marks for workings. Yeah. Not for A and B. Once you have finished copying, say done. Please, once you have finished copying, say done, right? And make sure the name of this question was Denzelco, if I remember right. Denzelco, right? Write that as well. Try to zoom in. But once you finish copying, say done. I'm just keeping questions side to side as well. Okay, in this, the second question is asking you to analyze the planning into labor usage and labor price. So basically, they probably did not require us to use method 1. We could have read B part as well. So we could have just used method 2. Because this is a B part. So maybe method 1 is more appropriate here. So they can give you both ways, but it's okay for me to do it this way. So you know that, even this method is possible. So actually in this, they asked this in the B part. So I'm going to again copy paste it here. Labor rate efficiency, they asked to, calculate it more detail. So this is basically the same thing that we got. So maybe they wanted us to do it method 2. It should have been more appropriate to do. Discuss the principles that should be applied in deciding whether or not a standard should be revised. You should never revise a standard just like to be revised, right? What is this? They ask planning labor usage. Yeah, yes. Variance analysis used to assess the performance of various managers involved in the wait, one moment. I just be clear of this. They're asking the usage. Only the planning usage variance. Yeah, they only wanted this. They did not want the labor. Price also what did they want? Planning variance into labor planning and labor price. Okay, they did not want the operational variance. They did not and usage. Planning price. Why is my planning price different? They did operational variance. Actual output. Planning, that's the deliberate. Okay. Oh, no, there's something called the planning price variance, which is slightly different format or a formula, which is revised standard, which they have taken the actual output. No, let's not get confused, right? Just let's leave it like that. It's okay. It's also right. Just leave it like that. That's the labor rate variance. Let's not get confused. They have done something else, but let's not get confused. What we did is also right. Principles of revising standards. So standards should be only revised if it is absolutely necessary. You should not allow anyone to just revise the standard just like that. Variance analysis is used to assess the performance of various managers involved in the purchasing and production processes. You use variance analysis to see how well the managers perform during the year. Their performance is compared to a target, the standard cost, and any difference between actual and standard will be considered to be the responsibility of a manager. If the standard and the actual are different, generally we would think that it was manager's responsibility. They did not do a good job, and maybe they did a great job. So the actual performance was bad or better. The controllability principle is that managers should only be judged on things that they have control over, where standards turn out to be unrealistic. If you have set a standard that is not right, due to changes that are outside the control of managers, they do not reflect accurately on the performance of manager because manager could not handle that or he could not control it. Standards should therefore be revised for uncontrollable factors before variance analysis is performed. For things that you cannot control, you need to revise the standard. The risk of revising variance is that managers may be tempted to include inefficiencies in the revised standard to reduce any adverse variance. They might be tempted to hide their bad performance and they might try to push it on to be a planning variance. So whatever is internal factor, they might try to slowly pass it out as an external factor. Variance therefore should not be revised to include any internal controllable factors or inefficiencies. In practice, there's likely to be some discussion of whether a change should be included in the revision of a variance or not. It is important, therefore, that all revisions are authorized by a senior independent body, such as budget committee, before being used for variance analysis. So before you revise a standard, a budget committee should only decide whether it's needed or not. This should ensure that changes made are fair and reasonable. You should only revise a standard if something outside your control changed. Still thinking of this. They have asked, go to the question. Analyze the planning into labor usage variance, labor usage planning variance, and labor price planning variance. Labor price meaning the labor rate. So the labor rate planning variance according to our formula. Standard rate minus the revised rate into actual hours paid. Just leave it like that. Don't go to do anything there because they have calculated a labor price planning variance. What they have done that labor price planning variance. They have taken okay guys, they have taken standard hours or standard rate minus revised rate into the revised hours, not the actual hours. They've taken the revised hours. So I'll tell you how they did that. Meaning the revised hours was how much? 1.4, right? They've taken 170,800 hours. That is why the answer was like that, but generally that's not how you do it. So they have taken 12 minus 13 into 170,800, right? That is how they got their answer. Wow. Yeah, that is how they got that 170,800. But generally, it's not like that how we do it. We take it into the actual hours. So don't get confused. Please don't use this method at all, right? Don't use this method at all. Use the method that you have been taught. You're going to get marks for that. Please don't use this, right? You will get your marks deducted. Discuss the factors to be considered in deciding whether a variance should be investigated or not. So you will first see the size of the variance. Is it a very big variance? Then investigation may be necessary. If it's very insignificant, small one, then you don't need to investigate. Adverse or favorable. Generally, the tendency is to investigate adverse variance, but favorable variances also should be investigated, especially to find out the reason. Maybe the material price variance is favorable because you use cheaper quality ingredients. So you have to investigate and see as well. You can't just ignore it. And also the cost of investigating the variance and what is the benefit you will obtain. You have to look at that as well. Is the benefit of investigating the variance greater? Then you should investigate. If the cost of investigation is higher, then you should not investigate. Historical pattern. Have these variances been happening over time? Or is it just happening once in a way? All right. Has it just happened this year? If it's happening for some time, then maybe you have to do the test and see why it is happening. And also the reliability. Is your data reliable? If your data is not reliable, then investigations also may not be reliable, right? So these are factors you have to consider before investigating variances. So we have done now planning operational variance, a part of it. After that, we'll take a break. After break, we will first discuss your doubts, and after that, we'll move on to performance measurement, right? So I believe we've done a good question today, but we are going to take a break. So your break will be from 7:20. After break, I'm discussing your doubts and like it's something that you want to do, because we're also doing a class tomorrow. Tomorrow's class is at 2 o'clock, by the way. Just standard time that we do our normal Saturday class. I'm doing it 2 to 4, like 2 to 4:30, like online, right? It'll be online. 2 o'clock, we're starting TRG. Tomorrow, I've informed the institute they'll start live stream at 2 o'clock. Online, right? Not at the institute. Come back at 7:40. Right, let's resume. Okay. Okay, so then now I want to see the doubts that you all have. What doubts? Just 1 minute. I want to see the doubts that you all have. I think Ram has sent quite a few doubts. Let me just check that first. Then I'll share this on WhatsApp. Ram. Wait a minute, my WhatsApp is loading. One moment. Ram, I'm just downloading your doubts. Ram, these doubts you have sent are from where? Study Hub. Are these all Study Hub stuff? These are from Study Hub quizzes, no? Okay, wait, I'll go to the ACCA Study Hub then, no? First one, you have, I think from the quizzes, no? Almost of your doubts are from the quizzes. What is this from? Exclusive use of piece of manufacturing equipment which will not survive the use of the project. The machine originally cost 51,000, currently has a carrying value of 6. This where is that question from? Relevant cost question from where is it from? From where did you get that relevant cost question? Relevant cost of study hub. Quiz number, what is it? Quiz number 9. Yes. Relevant cost is quiz number what? Pricing decision. I'm just going with some random values. This one, no? No, no. This one. I don't see this one. No, no, where is that question? From what quiz? That you got from a CTAB. From a different question. Okay, then not from here. Right. Carry. Then they have given carrying value of 6,000. Sorry. Resale value 8,000. New one cost replacement. Replacement cost 45,000. If it was left in existing use, it could generate cash to the estimated present value of 5,000. How do you find the relevant cost of a machine? Relevant cost of a machine. I've given a separate note for that. Lower of asset replacement cost and recoverable amount. So you have to take lower of assets replacement cost or recoverable amount. How do you calculate recoverable amount? Recoverable amount is higher of net realizable value. How do you calculate net realizable value? Fair value less cost to sell or value in use, being the present value of future cost flows or value in use. So value in use is the present value, which is 5,000. Net realizable value is fair value less cost to sell. That means if you're reselling it, how much? That's 8,000. So the higher the resale value, they said 8,000. The higher of that is 8,000. So we select that. Asset replacement cost is 45,000. So what is the lower one? Out of this is one thing you will select. Now the higher of net realizable value or value in use is this 8,000. So that is your recoverable amount, 8,000. You will compare that with the assets replacement cost. Asset replacement cost is 45,000 in that question. Yeah, so the lower is 8,000, meaning your relevant cost is 8,000. Am I right? Ram, the relevant cost there is 8,000. The lower one is 8,000, so you select 8,000. The recoverable amount. So out of these two, the lower is this, right? This and this is what you select. Out of these two, the lower one is 8,000. Ram, is that clear? That's your first doubt, Ram. Next one, 15. What is this? What is the minimum number of copies per year? What is that question from? Where is that from? Question 15 in the study hub under CVP quizzes. CVP quizzes. CVP is chapter 5. Question 15. Only 5 questions are there, no? How did you get? From where did you get this? Only 5 quizzes are there. Question 15, study hub on the CVP quizzes. I don't know from where I got that. From here. Ram, can you please tell me where that question is from? It's very difficult because I can't put it on the screen here. Okay, I can get it from here. This one, right? Okay. Double Co provides a photocopying service for clients at a price of 0.10 per copy. It needs to choose which of the 2 photocopy models to rent. The cost of each photocopier model are given in the following table. Annual rent, cost per copy. What is the minimum number of copies per year at which Model S would be preferred to Model T? So let's calculate the break-even. Provides photocopying service clients at a price of 0.10. It needs to choose which 2 copies to rent. They're asking when would you prefer Model S? Let's calculate the break-even. Rental cost, the fixed cost, cost per copy is the variable cost, selling price is 0.10. So for the Model S, it will be fixed cost 10,000 divided by variable cost is 0.10 minus 0.03. That's the contribution. Selling price minus the variable cost. So that is the break even for S. So the break even for T will be 8,000 divided by 0.10 minus 0.05, which is 8,000 divided by 0.05. 160,000. What is the minimum number of copies at which S would be preferred to T? If you want to sell 152,000, you can break even with S. If you buy T, you have to sell more to break even, right? See? If you buy T, you have to sell 160,000 units to break even. So it's better to buy S because you can. So S would be preferred if 142,857,000 copies are made. Because then you will still break even. If you had bought T, you will be making a loss. Because for T, you have to sell at least 160,000 copies to break even. Is that clear, Ram? Ram, is that clear? Then you have sent 4 more, right? This one. Logan. Binico. Logan. A company makes and sells. Double Co I cleared. Let's send these 3. Correct. Ram, break even if you buy S is, if you buy S, you can break even with 142,000 copies. But for T, you have to sell at least 160, then only you will break even. So if you were selling 142,000 copies, if you bought T, you will be making loss. So S is preferred at 142,857 copies, right? Because then if with Okay, I don't know. No, so if you bought S even at 142,857 copies, you're making break even. So if you sell a little more than that, you will make profits. But at T, you will be making losses. So S is preferred at 142,857 copies. Because at that number of copies, S is making break even, zero profit, no loss, no profit. But if you bought T, you'll be making losses. Logan has operating gearing ratio of 33.33%. Its sales are, I don't know why I didn't find this in the study hub. Cost volume profit analysis 15. There it is. This one maybe. From here, no? I'm just skipping this. Which is incorrect. Yeah, we calculated break-even point. Okay, wait, I'll tell you. Double code rendered into the chosen model, but for any copies of but they're not asking whether it's indifferent, right? What is the minimum number of copies per year at which Model S would be preferred to Model T? In the answering, what they're doing is they're seeing at the point at which they're indifferent. So at 100,000, they're indifferent. Both are making said at 100,000 copies, they're indifferent. That means S or T, both are making losses. But they did not ask us what point they're indifferent, right? What is the minimum that S is preferred? At 100,000 copies, double co will be indifferent to the model chosen. Doesn't mind whatever model. That's total cost of T. They're asking when would you prefer S? Break even between the two models will occur where they're taken both together. So break even is happening at 100,000. No, for S it happened at 142, for T it happened at 160. How come they did not consider the selling price when it was given? Very confusing question because they here at 100,000 they are indifferent because at 100,000 basically even if you buy S or T both are making losses. So it doesn't mind whatever you make. But S is preferred to T. Basically, what they're saying is at 100,000, the cost of both are same. At 100,000 units, the cost of S and T both are same. So if you are making, okay, what they have done is, I'll explain what they have done. They have done this. They have taken, okay, total cost of S is 10,000 plus 0.03 into number of units of S. Let's say number of units of the photocopies. If you are buying T, total cost of printer T will be 8,000 plus 0.05x. So at which number of units of photocopies will both the cost be the same? So that is what they have found. That means when you print this many photocopies, both the costs are the same. So how to find that? 10,000 minus 8,000, 2,000, 0.05x minus 0.03x. So basically, if you make 100,000 copies, both the costs are the same. At 100,000 copies, both the costs are the same. So even if you buy S or T, both your cost will be the same. If you want, you can try. When you're making 100,000 copies, print the S cost is 10,000 plus 0.03 into 100,000. 13,000, and even printer T will be the same thing. If you can check and see. 8,000. So if you are making this many copies, that is 100,000, both the printers will have the same cost. Both will have the same cost of 13,000. But the thing is, if you are making more than, at least one more than that, then S will be cheaper. Why? Because S's variable cost per unit is lesser than T. So because of that, when you're making 100,000, you don't mind whatever printer, both the costs are the same. But if you're making one more, then S will be cheaper. Because for the next unit, next one more unit, S has a lower variable cost. T has a higher variable cost. The fixed cost will be the same, right? The variable cost for the extra unit is lesser for S. Therefore, you will prefer S. That is how they have selected. They have not checked the break even. They have checked the total cost. It's not break-even point calculation like they say here. It is the total cost calculation that they have tried. When you do break-even calculation, you are getting a different answer. So they have checked the, in this type of question, you should not check the break-even. You should see the total cost. So the total cost is cheaper for S. Therefore, at 100,000, you are indifferent. But whenever you are making one more than that, you will prefer S. That is how they have selected. Next one, I think this one, no? You said Logan. Logan has an operating gearing ratio of 33.33%. Its sales are currently 100 million and its operating profit is 20 million. Operating gearing is calculated by dividing fixed cost by variable cost. What will be the operating profit be if its sales increase by 15%? Okay, they have given the operating gearing and they have told you that they have calculated the operating gearing by taking fixed cost and dividing it by variable cost. Okay. So 33.33 divided by 100. If fixed variable cost is 100, fixed cost is 33.33 of it. That's what it means. What is the operating profit if sales increase by 15%? So if sales increased by 100 into 115 divided by 100, current sales are 100. So if sales increase by 16%, that will be your sales. Your operating profit will increase by how much? What will be the operating profit? Fixed cost is not going to change. Fixed cost is not going to change. But your variable cost will also increase in line with sales, right? Here they said operating gearing is calculated by dividing fixed cost by variable cost. I just took the percentage. So 33.33 meaning 33.33 divided by 100. The operating gearing is fixed cost divided by variable cost. I just took it like that. I just took it like that. Fixed cost divided by variable cost. Right? So we can take it in the ratio. Actually, if you go to divide this and take it in like a ratio, it can be 1:3. Double check and see. You can simplify it further to 1:3. Okay. Now what we know is what they have given. So this is the increased sales. But what they have given is they have given us that currently, okay? Currently, sales are 100,000 and profit is 20. That means what, guys? That means cost is how much currently? Currently, their total cost is 80. That's how they got profit of 20. Now, this total cost includes variable cost and fixed cost both. And it's in the ratio 1:3. So that means in your total cost, variable cost is, the variable cost is 3 times 100, right? So you can even do it like this. Variable cost is 80. The total cost is 4 because 1:3 means total cost is 4 parts. Variable cost is 3 parts out of that. 60. And your fixed cost is therefore 80. Sorry, 20. Now, when your sales increases, only your variable cost will increase. So, increase in variable cost. Sales increased to 150. The cost will be, fixed cost will be fixed. Fixed cost will be fixed now. It will be still 20. But your variable cost will increase in line of with sales. Variable cost will be now, that will also increase by 15%. So now your total cost is, your profit will be 26. So that's how you do it. That's your new operating profit. Okay. What's the next doubt you have sent from? Biniko. Biniko is where, from where is that question, Ram? Biniko, and also this 8th question you sent. This one also you have sent as a doubt, right? A company makes and sells all 3 products, RS and T. Extracts from the weekly profit statement are as follows: RST profit, sales, variable cost of sales, fixed cost, profit. General fixed cost absorbed using a unit absorption rate are given. Unit absorption rate. So they have divided the fixed cost based on the units. So maybe the sales units were the same because all the 3 products have the same fixed cost, 3,000, 3,000, 3,000. If the mix of products produced and sold is changed to 20%, 50%, 30%, what effect would this have on the weighted average contribution to sales? What is the current weighted average contribution to sales? What's the current weighted average CS ratio? How do you calculate weighted average CS ratio? Total contribution divided by total sales. So currently total contribution is sales minus variable cost 22,000 divided by 45,000. So current CS ratio is that amount, 0.48, like 489. So if they change the mix, the fixed cost will be now in different ratios, right? So will it affect? If the mix of products sold is changed to 20s to 50s to 30. Oh, that means the sales pattern will change, but the total sales will be the same. Will it change? Only the fixed cost will move in a different direction. Will it change? Okay, let's see. Yeah, so now what will happen is your sales will be in a different direction. Let's change it, in like. Oh no. Okay, let's change our sales, now. So now what will happen is they're selling in a different mix now. So sales will now be 45,000 into 20%. 45,000 into 50%. And 45,000 into 30%. Your total sales will still be the same. And your variable cost of sales will be, that will also be changing its direction. So this is our existing one we have calculated. Cost of sales is 40% of sales here, no? We have to find the percentage. Variable cost of sales percentage has to be found. Yeah, you have to, it's like a cost of sales, a percentage of sales. So here it's 40%. So now 9,000 into 40%, the new variable cost is 3,600. Yours is it 40%? 5,000 divided by 60%. For S, it's 60%. And for this, it's 50% as well. This 50%. 10, no? If you're wondering what I'm doing there, you have to find the ratio. The individual CS ratios have to be found. Okay, we can do that here. We'll do that here so that you will get it. We have to, before we do this, we have to find the individual CS ratios. The individual CS ratios. That we have to find from the old data. So here, the CS ratio is what? Here the individual CS ratio is 6,000 divided by 10,000. Because earlier it was contribution for this is 6,000. So it's 60% CS ratio. Here it is 15 minus 9 is 6. So 6 divided by 15, meaning it's 40%. Here it was 10 divided by 20, 50%. So now the contributions would be sales into 60%. So I'm taking directly the contributions. So now the new contribution here is 21,150. So the weighted average CS ratio now is 21,150 divided by 45,000. So what has happened to the weighted average CS ratio? It has decreased. So it would decrease. Next question you have sent is Binico. I have not checked that. That's also from here, Binico. Questions. Where is Binico from? Quick ratio. Where is that from, this boy? Binico is from quick ratios. So what is that chapter? further measurements of performance measurement. Is it chapter 15? Yeah. Binico has annual sales of 960,000 and a current ratio of 3:2:1. All of its sales are for cash and are priced at a markup of on cost of 50%. The average cash balance is 40,000 and the average holding period is 90 days. Assuming 360 days in a year, what is their quick ratio? So they have given their current ratio. In Binico, they have given the current ratio. Current ratio as what? What is current ratio? Current assets divided by current liabilities. That has been given to you as 3.2:1. All of its sales are for cash and are priced at a markup on cost of 50%. The average cash balance is 40,000 and the average holding period is 90 days. So what is the closing inventory? We have to find the closing inventory here. Then only we can remove it from the assets. So we have to find the inventory. What is the inventory holding period ratio? Inventory holding period is, what's the formula for inventory holding period? Let's take that formula first. What's the formula for inventory holding period? Inventory turnover period is closing inventory. Now that is what we want to find. Divide by cost of sales. Cost of sales we can get into 300 and they have said to assume 300 and how many days? 360 days. Cost of sales we can find. All of its sales are for cash and are priced at a markup on cost of 50%. So we have sales. Sales is 960,000. We don't know the cost of sales, but we know that the markup. We know the markup. Markup is 50%. Okay, what is the conversion formula? Price plus cost plus profit equals sales. Markup is profit over cost. So cost is 100, profit is 50, sales is 150, that means. So how do you get the cost of sales here? Cost of sales will be 960,000 is representing 150. How much is 100? So your cost of sales is 640,000. Then we can find no closing inventory. 90 days is the holding period. Closing inventory X, we don't know. We are trying to find it into 360. So we multiply basically both sides by this amount. And we have that equal to 360x. This amount. How many zeros? 1, 2, 3, 4, 5. 60x. So x is equal to 160,000 is your closing inventory. Now, how do you find your quick ratio? We need to have the assets and liabilities, which we don't have. We know the cash balance. Do we know the total assets? Do we know the total assets in this case? We do not know our total assets. But we know one thing, we know the cash. what we can do is, okay, so we know that this is the inventory, okay? So let's assume that the only two assets are inventory and cash. We look, because they say all the sales are for cash, all the sales are for cash, and they have the cash balance. So meaning the other asset is the inventory. So current assets we can take as the inventory 160,000 and the cash 40,000, meaning the current assets are 200,000. Am I right? 160 plus 40,000. Meaning your current liabilities is 1 point, no, current asset is 3.2, no, and liabilities are 1. So your current liabilities will be based on this. This 200,000 is representing 3.2. Meaning liabilities is 62,500. So now for the quick ratio, we only take the cash. We don't take the, now out of the 200,000 total current assets, we remove the inventory out. Meaning for quick ratio, we only take the cash 40,000 asset and the liabilities this amount. So the quick ratio comes to how much then? Your quick ratio will come to 0.64B. That will be your quick ratio. Yes, correct. That's all, no? Ram, you have sent doubts. Yeah, that is all Ram's doubt. Ram, have I cleared all your doubts then? Anybody else who has sent doubts? Someone has sent me a message. What's that, miss, regarding the learning rate calculation? I have a doubt in learning curve. Is there easy way to calculate learning rate? Ah, okay, that doubt. Could you do the 8th question, study of practice? This one? This one, Tirza? You want me to do this? Tirza, is it this? Okay. So here they are asking you, Mousco had a current ratio of 1.6:1. Inventory represents 30% of current assets. Mousco has no positive cash balance but does have an overdraft. If it sells half of its inventory for cash at a markup of 100% and uses the proceeds to reduce its overdraft, what will be its current ratio to 2DP? Okay. Okay, so let's do this like one by one slowly. Wait, students, I've gone somewhere else. I don't know where it has gone. Where is that question that we started? Okay, so let's do it one by one. Binigo has annual sales of 960,000. Sorry. Mousco has a current ratio of, so Mousco's current ratio is 1.6:1. Meaning, what does this mean? Current assets are 1.6 and current liability is 1. That's what it means, right? Inventory represents 30% of the current assets. So inventory is 30% of the current assets. So how much is your inventory? So your inventory will be 1.6 into 30%. Mouseco has no positive cash balance but does have an overdraft. If it sells half of its inventory for cash at a markup of 100%, that means inventory will get minus, but you're selling it for cash at 100%. That means you will get 2 times this value for cash. So your assets will go down by 0.48, but it will come up by 0.96 because inventory will go out, but cash will come in. And uses the proceeds to reduce the overdraft. Okay. They sold the inventory, but they used the cash to pay for the overdraft. That means the money that came, they paid the overdraft. So the remaining assets are, from the assets, the inventory went out, cash didn't come in. From the assets, the inventory went out, cash didn't come in. But the cash that you got, you used it to pay off your liability. So what is your ratio now? 28 is the point. And uses the proceeds to reduce its overdraft. Yeah, they're using the entire proceeds to reduce the overdraft. It should be 28. I don't know if I done a mistake. Or I have done a mistake. Oh, it sells half of its inventory for cash, not all the inventory. They only sold half of the inventory. Oh, wait. The inventory was 0.48. Half of it is 0.24. They only sold half of the inventory. Sorry, that was my mistake. They sold half of the inventory. That means they would get how much from the half? They sold it for 20% markup, two times 100% markup. So they will get only this much of money, right? They only sold half of the inventory, not all of the inventory. Yeah, 2.6. They just sold only half of the inventory, not all of the inventory, right? 2.6 to 2 DP. Yes. Somebody had asked me, is there an easy way to calculate learning curve questions? Learning curve, yeah, there is a few formulas. Who is that student? Is that student online? Yeah. Oh, that student has just sent me. Who is the student? Metara is there. Learning curve, there is an easy way. Are you not a student from my class? Metara, are you from my class or not from my class? Quantitative aspects. Metara, are you a student from my class or not? So learning curve, you have easy ways to calculate years. Are you coming class? Then didn't you see this? There are 2 ways to calculate learning. One is this first method, reducing the average time by the learning rate every time output doubles. So every time output doubles, R is applied on the average time. That is the easy way. Or you use the learning formula. This formula is to find the average time. Those are the 2 ways. If you go through the chapter when I did learning curve, you will get the full understanding of that area. Because I have applied both the methods to calculate learning. You can, because I think you're a student from my class, you will have access to recordings. So you can watch that recording to see how both methods have been used. I think last week I did some questions on learning also, right? On TRG class. Is that all for your doubts, guys? Metara, check the quantitative aspects of budgeting, that area, the learning part that I did, go through that. So you will see how I have applied both. Any other doubts that you had, Ram? Have you cleared all your doubts? I got more doubts during the week. This is all. Then again, tomorrow we have a class 2 o'clock. Please join that as well. In that class, I will be doing questions from chapters performance measurement, further analysis. Those are all mainly theory. So I'll read a few questions from that side. And also I will be doing the transfer pricing and divisional area as well. And again, the remaining time I'll be clearing your doubts. Okay. So you all don't have more doubts, right? Right. So we'll stop there for today. Tomorrow at 2 o'clock, I'll meet you all again. And we will discuss the other areas. If you all want learning curve, maybe if you all want it, I'll do another question there. And then we'll clear your doubts, right? So I wish you all the best for studying, and then keep sending me the doubts, guys. I will clear it at one point at the class, or now after that, whatever, after tomorrow's class, whatever you all are accumulating, maybe we'll have another session to clear them. Right? So tomorrow, try to get all your doubts sorted that we can clear them. We'll be doing more areas as well. Today, I'm stopping here, right?